Hey everyone! Today, we're diving into a situation that has quickly turned into one of the most shocking financial setbacks in China's EV sector this quarter. Li Auto has just reported its latest earnings, and the results weren't just disappointing, they signaled a sharp reversal from what many believed was one of the strongest hybrid-oriented EV companies in the country. After years of being praised for its profitability and rapid sales expansion, Li Auto has suddenly slipped into unprofitability. Meanwhile, competitors like NIO are rapidly moving in the opposite direction, capturing more market share and building momentum across multiple segments. In this video, we'll break down exactly what went wrong for Li Auto, how consumer confidence collapsed, why their recent controversies sparked even deeper distrust, and how NIO has quietly positioned itself to absorb the customers Li Auto is losing. Let's get into the details. This is not financial advice. Please do your own research. Li Auto's latest financial release paints a very concerning picture. Just a year ago, they were celebrated for strong profits, quickly rising deliveries, and an expanding brand reputation. Now, deliveries have dropped sharply year over year, revenue has declined significantly, and they've moved from being a profitable company to reporting losses. This sudden reversal is a reflection not only of internal problems, but also of how unforgiving the EV market has become. When rivals improve and expectations shift, companies without a deep competitive moat get exposed quickly, and that's exactly what's happening. From a pure product comparison, the gap becomes even clearer. Take something as simple as storage and design. NIO's ES8 and ONVO L90 come with generously sized trunks, adding usability and flexibility features customers increasingly expect in modern EVs. Meanwhile, Li Auto's new models like the Li Auto i8 don't offer a frunk at all, which already creates an unfavorable comparison. Even the Li Auto L6, which does include a frunk, has one so small that it barely qualifies as practical. On features and user experience, NIO's lineup feels more thought out, more premium, and more aligned with what EV buyers now demand: clean design, large displays, and consistent high-end functionality. But the design gap isn't the root of the problem. The deeper concern is the collapse in trust. In their most recent earnings call, Li Auto admitted that their new i6 model won't use a single standardized battery supplier. Instead, consumers will receive either a CATL battery pack or a pack from a different supplier assigned at random. In the EV world, battery quality is everything. CATL is widely regarded as the gold standard. The alternative supplier might not be terrible, but the second-hand market has already made its judgments. We saw this with the L6. Models equipped with non-CATL batteries depreciated at alarming rates. Second-hand dealers actively avoid them. Buyers don't want them. The difference in resale value between CATL-equipped and non-CATL-equipped vehicles is massive. So imagine being a new buyer who doesn't even know which battery pack they'll receive. That uncertainty alone is enough to push consumers toward other brands. Li Auto claims they were forced into this dual supplier arrangement due to battery shortages. But while that may be true, the decision comes at the cost of long-term customer confidence. When buyers feel they are taking a gamble rather than making a safe purchase, demand drops, and that's exactly what the recent numbers show. Another major factor weighing down Li Auto's reputation is the sudden rise in negative associations with the brand. Social media discussions have repeatedly highlighted questionable driving behavior linked to certain Li Auto owners. While every car brand has problematic drivers, Li Auto seems to attract an unusually high share of viral negative incidents. Whether fair or not, this shapes public perception. People don't just buy cars, they buy communities, reputations, and identities. If consumers feel that Li Auto's customer base is becoming associated with irresponsible behavior, they may choose a brand that feels more respected and refined. Yet none of these issues compare to the biggest scandal Li Auto has faced, the Li Auto Mega Fire incident. This event spread like wildfire across social platforms and ignited widespread concern about product safety. The car burst into flames in under 10 seconds while simply driving normally. No crash, no external impact. Video evidence showed rear passengers unable to open their doors as the locking mechanism failed. They had to climb toward the front seats and escape through the front door just in time. Fortunately, nobody was injured, but the damage to Li Auto's reputation was enormous. The company quickly issued a large-scale recall, blaming the incident on a manufacturing defect related to the cooling liquid system. They suggested that factory workers cut corners, but many questioned whether the responsibility lay with the employees or with Li Auto's internal quality control practices. Consumers were left wondering, if something this serious happened once, could it happen again? This is where NIO's battery swapping model becomes not just a convenience advantage, but a safety advantage. During every battery swap, NIO's automated system checks the battery's health, temperature, and performance in real time. Any potential issues are flagged early. But with traditional EVs, including Li Auto's hybrids, you may never know the battery is overheating or degrading until an incident occurs. The mega fire reminded the public that safety isn't just about reliability. It's about monitoring, maintaining, and replacing batteries before they become dangerous. And as more customers recognize this, NIO's battery-swappable architecture becomes increasingly attractive. Li Auto also faces a major strategic problem. Their business model no longer gives them a competitive edge. They were once praised for pioneering the extended-range hybrid EV format. It worked. They gained early sales dominance because the concept was new. But the innovation was easy to replicate. Leapmotor copied the formula and offered nearly identical functionality at a lower price. Consumers began viewing Leapmotor as a cheaper Li Auto, which quickly chipped away at Li Auto's market share. Then you have NIO stepping into the same customer segment with the ES8 and other models. Many ES8 buyers are first-time pure EV owners who previously drove hybrids. They eventually realized that they barely used the gasoline generator in hybrid models. If the generator is rarely used, why pay for the complexity? Buyers start shifting to pure EVs, especially ones with battery swapping, better tech, and strong service networks. NIO's CEO has even explained the transition clearly. Hybrids are a temporary stage. The long-term destination is full electric. And for full electric, battery swapping is the ultimate solution. The market data increasingly supports this view. Li Auto is attempting to revive demand with new large battery hybrid models across the L9, L8, L7, and L6. But it may be too late. The market has evolved, competition is stronger, and consumers are becoming more informed about battery safety, depreciation, and long-term ownership experience. With NIO preparing models like the ONVO L80 and ES7, and with AITO also intensifying competition, Li Auto finds itself squeezed from all sides. And when you compare delivery data, the trend becomes unmistakable. NIO's deliveries are going up. Li Auto's deliveries are going down. Market share is shifting and not in Li Auto's favor. To sum it up, Li Auto's recent earnings report exposes a company under immense pressure. Profitability has evaporated, deliveries are falling, and consumer trust has crumbled due to inconsistent battery sourcing, depreciation issues, social reputation challenges, and most damaging of all, the mega fire incident and recall. Meanwhile, NIO has continued expanding, leveraging battery swapping, strong product design, and growing consumer confidence to absorb a significant portion of Li Auto's former customer base. If current trends continue, the gap between the two companies is only going to widen. Li Auto may recover over time, but the road ahead is steep. NIO, on the other hand, is entering a new growth phase, and the numbers clearly show it. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.